Here are 6 things that'll prevent your mortgage from getting approved. Don't do this. Hey there, Brandon with Integrity Home Mortgage, local residential mortgage lender here in Richmond for about 20 years. Always looking to help out our clients, post great information to educate them so they can have the smoothest process possible when buying a home. Keep in mind, this mortgage process can be frustrating under the best of circumstances. All right, now we're always putting out great information, a couple videos a week here. So please click subscribe. I don't want you missing any information. Always gonna be great info coming out. And again, this is to provide you a better mortgage experience. So why wouldn't you subscribe? All right, so today we're gonna talk about some common mortgage mistakes that home buyers make during the process. These are things that can either kill the deal, delay the closing, just create a major headache during the process. And as I said earlier, the process is frustrating under the best of circumstances. First item, make all payments on time, right? So you've got car payments, student loans, boat loan, whatever it may be on your credit report. Maintain your perfect payment history. Even if it's on the mortgage on the home that you're selling, make sure you pay it up to that last mortgage payment on time. Very important there. These are items here that can create problems that when we run your loan back through the automated underwriting engine at the end of the process may prevent you from getting that same pre-approval results that you did at the beginning. We want to make sure you remain pre-approved all the way through closing. So again, don't be late on any payments whatsoever. That's just a good rule in general, as that's the biggest factor in what calculates your credit score. All right, so we all have heard some crazy horror stories out there, right? Let me know what you've heard. I'd love to hear what you, your friends, family may have done to throw a kink in their mortgage process. Put it down in the comments. Let's compare some stories here and give some good examples of what not to do. Okay, we all know someone that's gone out there and bought a car during the home buying process. Of course, the car salesman can be a bit persuasive there at times, but that's gonna be a major deal breaker right there. What happens is when we pre-qualify you at the very beginning of the process, we're pre-qualifying you off of your current debt load. So when you go out there and purchase a new vehicle, well, now we have to factor in, $400 or $500 a month for this new car payment. That may put your debt to income ratio outside of the guidelines and you no longer qualify for the loan. So if there's any purchases that need to be done, major or minor, call your lender. If it's something you even have to question yourself, that means you need to discuss it with your lender. Same thing with appliances, furniture for the home. You're typically going to have to wait until you have the keys to the home in order to make those major purchases there. But again, consult with your loan officer. They'll let you know when you're safe to proceed with normal life and purchases once again. All right, number 3 here. So as we mentioned, your debt to income ratio at the time of pre-approval is a main factor, right? That's what we pre-approved you on, and we don't want that to change much at all. So don't rack up credit card debt. Your existing accounts that are there, you want to make sure you're keeping those balances at or below the balances they were at the time of pre-approval. If you go in there and max out the credit cards, that can create some problems as well. It's just going to show higher minimum payments on the credit report. And again, it will drop your credit score with the higher credit balances. So remember, payment history is number 1 and what calculates your credit score. Number 2 is how you manage your credit card balances. So if you max them out, expect that credit score to drop. So live a boring life. You're not gonna do any crazy purchases. We're not gonna buy tickets to Europe. We're not buying that new car, and we're not maxing out any credit cards just yet. One of the most frustrating processes with buying a home is the documentation that we have to provide while going through the mortgage process. Keep in mind, you may be borrowing $250,000, $500,000, or much more. It's a lot of money there. The investors of that are at risk. You're at risk. The investors, though, do carry a bit more risk, so they want to vet you. It's a trust but verify system. They want to make sure that you are solid all the way throughout the process. So again, back to the frustration part is the documents. And most importantly, it's the bank statements that will create a lot of frustration there. whether it's just getting them printed in the right format, getting the URL at the bottom. But the other big thing is, as we go through the process, we may need to get updated bank statements from you to show your earnest money deposit clearing, or maybe explain a large deposit or transfer from another account. And while the underwriter's looking at these new bank statements, if they see large deposits, reoccurring payments, things like that, that can raise questions that the underwriter may bring up right before closing. Again, that's the time we want to celebrate your loan being approved, not the underwriter second guessing it at that point. So live a boring life until you get the keys in your hand. All right, this is one we run into all the time, and it's changing jobs while going through the loan process. Now, of course, we never want to see you pass up a great opportunity to do better for yourself and provide better. So always, we want to see you do well. Now, if you are looking at potentially changing jobs while going through the home buying process, definitely reach out to your lender. This is a conversation you must have early in the process. For example, if you're, let's say, an HR manager for a large corporation, you're a W-2 employee there, and you're going to transition to one of their competitors in the same position in the HR department, higher pay, obviously, and you're still going to remain a W-2 employee, there's ways we can do that with no problems. You'll still close on time. Some of the changes that would drastically impact the approval in a negative manner would be, let's say that same person that's the HR manager leaves that company and decides to go into car sales. Now they're a commission-based employee. They're working off of selling vehicles and receiving commission. Well, we now need a 2-year employment history to average out your qualifying income, right? So you'd have to wait literally 2 years on that commission-based income. That's the big thing. So again, if you're considering a job change, talk to your lender. We're not here to kill the deals. We want to help guide you through to the closing table with a smile on your face there. All right, that's just a few things that can really throw off your mortgage closing there. Again, whether it's incurring new debt, changing things on your credit report, co-signing on loans for other people. Again, you just want to live a boring credit life from the time you do your loan pre-qualification until the time you have the keys of the house in your hand there. Any questions, please throw them down in the comment section. Love to get feedback from you. Again, click that subscribe button. You know it's great information. We're going to keep putting it out, and we'd love your support there. So click that subscribe, click that little bell as well. You're going to get the updates there and notifications each time we post some new information there. Thank you again. This is Brandon with Integrity, and I'll see you on the next mortgage tip.